Hello and welcome again to our pop-up studio, Podster at STEP Conference 2023. It's really beautiful to be here, outside, outdoors. The weather is beautiful, and the conference itself is more like a family gathering of people in the same business, in the same area, and really nice discussions. And even better when you discuss with the people who know so many things about the region, about the industry, and about the ecosystem of startups in the region. This is why I'm talking with Khaled from Nuwa Capital. Hello, Khaled.
Hi.
And welcome to the Change Officer again.
Yes, always great to be back.
Okay, so I have a big shoes to fill because Vuk was interviewing. Interviewing. What changed since your last conversation in Nuwa Capital? Many changes, or?
I think the first thing that changed since then was I was recovering from COVID last time I did the Change Officer.
Oh,
so
really?
So I feel a lot more fresh now.
Oh, that's good. That's good. So my task is easier then.
Yeah, and my voice is a bit clearer.
Oh, okay. Yeah. So with your clear voice, can you tell us what are you doing at the STEP conference and how you feel here?
Sure. So just a bit of background on us. So we're a regionally focused venture platform. So we have an early stage $100 million equity fund. We also are building out other kind of products. So we have kind of looking at the growth fund and debt and like different permutations of that. We try to kind of really support our companies. So we have operating partners that go into the companies that we're doing. So STEP is a great opportunity for us to run into serendipitously like all the people that we don't often see, right? You know, for even if though it's a small ecosystem, but it's a great place to have these kind of interactions with people, whether they're investors or companies or other kind of people in the ecosystem that, you know, happens by chance. And it's a great way to catch up with people. Some of the content's great, so it's also like a great way to kind of participate in conversations. So we're on a panel, we're on a few panels. So I did one, I moderated the panel yesterday on exits. Today, like some of my colleagues are on some other panels. We're part of the judging competition. So we like to kind of like mingle throughout the conference.
It's good being here, definitely. But let's go to the things that you all mentioned first in your.
Sure.
So about Nuwa Capital. You said you are early stage, 100 million early stage VC. What is the difference? And for you, grass is always greener on the other side.
Sure.
You are early stage, but then there is depth, as you said, and there is growth and late stage. What are the differences for one VC to be one on another?
So
what is good or what is bad? Yeah. Pros and cons.
So early stage is really focused on your portfolio is larger, your ticket size is. Your portfolio is larger, your ticket sizes are much smaller, and you're really coming in very early in the process. You're kind of backing founders right as they are formulating a business. And the idea for the business at the early stage is very different to where you end up with where the business will be if it's successful. So we're not really betting on business models, we're betting on direction and on founders. So we're betting on a broad trajectory of where the founder wants to go.
Like the product, love the founder. This is what they say in the VC world.
Early stage is more the founder and the direction, and then growth is more, it starts moving away from that closer towards like the actual business, the details, the specifics, etc. So it's a bit of a kind of spectrum as the company develops.
Okay, so in the future you want to expand there also in this. And what is the beauty of the debt?
That I think companies, the region doesn't have a lot of access to private credit or credit generally. Like accessing credit for anybody is really hard.
Yes.
We think there's a big gap in the for us to eventually get into private credit debt once we're ready, because startups, tech companies, but companies more broadly have very limited access to kind of debt products. This is one of the most unbanked, underbanked regions of the world, even the GCC.
Yeah.
So we think there's an opportunity to help kind of give optionality and options to founders in terms of how they raise capital. Sometimes equity is appropriate, sometimes debt. They're different use cases for each.
Okay, and what is the usual ticket in your fund? Which kind of startups that you
on the early stage fund? Our entry ticket. The idea is we'll end up with a portfolio about 50 companies. We're in about 30. The entry ticket is quite small. On average, is like 750K. Anywhere between $500,000 to $1 million.
Okay.
But then the idea is we concentrate capital over time in the companies that are most successful. So we reinvest in companies that we like, and we double, triple, quadruple down. So we end up.
So you follow them.
Yeah. We end up concentrating like $4 or $5 million, $6 million per company in the end. And I think we'll end up in a situation where we may have invested in 50 companies, but 10 companies will have 60-70% of our overall capital.
That is, and what obviously with the capital comes some smartness, as they say, smart money. Like what is that other thing that Nuwa Capital is pushing into the startups?
So we try very hard to help support our companies. We think that starting and operating and scaling a business in our part of the world is a bit trickier, a bit harder, and the founders need a bit more help than other parts of the world. So what we do is we have part of the team are operating partners, who are people who have operated businesses, who help support the companies in their operations. But we also have subject matter experts that that are freelancers that we make available to our companies for free, obviously. But they're people in marketing, product, tech, recruitment, finance, legal, etc. And we just make them available for our companies to help support them in their journey.
So out of these 30 startups that you are managing, what industries they're in? Is there any specific industry that you are focused?
We're primarily consumer internet focused, but we're trying to kind of broaden it, and we're starting to see opportunities a bit broader than that in industrials and manufacturing and stuff like that. But our main focus is consumer internet. That includes retail, online commerce, so early investors in companies like HomeSmart or Iowa. We're also big investors in fintech, so we're investors in companies like Irad, Baraka, etc. And then we're also large investors in healthcare, health tech related businesses, and prop tech. So we cover a wide spectrum, and we're really looking for opportunities that are really addressing large problems, large addressable markets, cross-border issues, and that's what we're looking at for.
Okay, and how it is finding, like I'm sure that being an investor, like I think that most of the investors that I from VCs that I interviewed here wore glasses.
Do they?
Yeah, because probably they don't want to expose themselves to.
I'll take off my glasses.
No. For the conference, I'm saying, and so on. And how do you manage to have some startups stand out of the crowd? That probably there is a lot of noise there when you are an investor. How do you manage that?
I think we're really looking for companies that fit a pre-existing thesis we have. So whether it's like a sector or an idea or a founder profile. Because we see volume.
Quick iteration.
We see like, 1,000 companies a year. So we're trying to kind of figure out what are the predictive attributes that we want to invest behind. What kind of profile the founder have, businesses, etc. And we try to kind of match that quick. Sometimes that has its downsides because you can't predict, you can't like forecast everything, so you might miss stuff. But also, this is a very nascent, very early ecosystem, very fast changing, very fast evolving. So you want to be able to kind of be agile, nimble, and change your view very quickly as it kind of develops. So that's
the key. You mentioned that you were at the panel of about exits.
Yeah.
What was the topic
so we
around
were talking about, there have been a few high-profile exits. I mean, as you know, like the markets kind of had a big downturn in tech generally. So there were a few high-profile exits in the region. Namely, we had Swivel, which went public through a SPAC, and that has the market caps collapsed. It's like a $10 million company. Talked a little bit about that. One of my co-panelists was also his company was sold to Swivel, but then Swivel didn't go through with the transaction, so it created a lot of complicated situation for him. So we talked about like how founders can manage. They should always be. I think the takeaway was always be paranoid. Just because you sign the piece of paper doesn't mean like it's done.
Yeah.
So I think that's super important. And it's super important to kind of build a business. Even the acquisition is secondary. It's more about like making sure that you're building a good business regardless.
Healthy business.
A healthy business. Exactly. That's exactly right.
So that's the common thing really for everyone at these days, and maybe this time of this kind of market helps like clear out the picture on the not only in this market but everywhere in the world.
Yeah, I think it's it's what's happening globally is a a shuffling out of like the weakest links in the ecosystem, like a really aggressive process of creative destruction. And I think a lot of investors forget that. A lot of people in our ecosystem generally forget that we are in the business of creative destruction, so we participate in it. We are at the forefront of that upheaval. So past few years, there's been a lot of like easy money flowing through the system, so it's fine. I think what will weed out is a lot of like hype-based investment, so just kind of following like growth at any cost, etc., which was, arguably happening a bit too often. We saw that a bit early on, and we retreated from it. It kind of scared us a bit. At the time, now it makes us look very smart, but at the time we were, we thought, are we missing the train here? Like, these companies are growing, like they're, $500 million GMV, but like 2% gross margin. We need to get on this. And but then I think we were our circumspection was rewarded. I think. I mean, it's early days, to be fair, and it's early days.
It is, but still, like I'm very, very glad that you said that, because also from the founder's perspective, which I am, I was like, fuck, what I'm doing wrong? Like how this is possible? Maybe I'm not doing things well, whatever. But then the market and this bear market, call it.
I mean, people can time. If you can time the market, then it's great to do that type of thing.
Of course.
But I mean, who can time the market?
No.
I mean, to be fair, like the past 10 years was just like a slow upward trajectory, and COVID made it go faster. But yeah, it's impossible to time a market, really. Or it's very. I mean, if you can, then you're a genius and you should be doing something else. But if you can't.
Or you invented time travel, something of those two.
If you can't, then you should probably be, like always focused on building a good business first and foremost, and worry about everything else later.
Yes, have a good zebra, as they say, rather than unicorn. So what is your advice for all the startups exhibiting at STEP conference and the same conferences? What is the key thing that maybe you see them missing, some opportunities or something like that? What would be your key tip pro the conferences like STEP?
Well, I think conferences are a good place to kind of meet people, and they should be out there like just meeting people, like like I said, like this kind of chance interactions is what matters the most. And you'll meet people who may not be of value or may not be lead to something immediately, but you want to kind of maintain and build your network over time, and there's a kind of secondary positive effects to that over time, so like you don't know how it goes. So I think these events are, I always feel that they're for us and for startups, for everybody. I think they're less about content or about exhibiting. They're more about just finding good ways to interact and meet people in a friendly and easy setting. And so I think this is, I recommend that for startups to do more of that. Just be out there, meet people, like, have conversations. It is a good environment for that kind of thing.
That's the perfect ending for our this conversation, and I can prove. We are the proof. The poster is the proof. You met Vuk. You met Vuk already.
Yes.
Now you met me, and so we have a good network communication here. Thank you very much for being in our podcast.
Thank you.
And of course, if you want to hear more from the Change Officer podcast, share, like, and subscribe, and also follow us, our special edition from the STEP Conference 2023.